Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie.
And I'm Brittany Umar, and together we bring you Morning Call Express. So world markets are flat this morning. Our futures are pointing to a higher open ahead of day one of the Fed's two-day meeting. And we've been seeing a lot of indecisive action. So how do we sort of brace for today ahead of the meeting being kicked off?
Yeah, I think we'll get more of the same, generally speaking. I think when you head into a big announcement like a Fed rate decision, I think people aren't willing to make big bets in either direction because it's going to be a market-moving headline if they do announce tapering or whether they back off a little bit from that tapering narrative, or what they're really expected to do is more aggressively inch towards tapering without actually doing it and possibly heading for the QE taper in September.
Yeah, the action has been relatively unpredictable given all the talk of the tapering. Yesterday, the markets had been strong until the Financial Times article said that the tapering was actually likely to be imminent and that would be announced at the meeting. That triggered a sharp sell-off. We were able to bounce into the close, but what do you make of all of that action? Yeah,
the market was extremely strong in the morning. It was a little bit surprising heading into a big Fed rate decision to see the market that strong. But like you said, that Financial Times article came out, and to me it was a little bit more of just an excuse to hold the market within that upper level wedge pattern, within that upper level range, because expectations pretty much matched what was released in that article. The expectations are that they will inch more towards tapering and possibly taper in September, and the article didn't really say anything more than that, so I think it was more of just an excuse for people to sell. We did bounce into the close after that midday sell-off, but I think in general we'll see that choppy type action until the decision tomorrow afternoon.
Well, why don't you give a visual for us then of the levels we should be watching in the S&P?
All right, we'll go and take a look at a chart of the SPY, the S&P 500 ETF. You can see a nice upper level wedge pattern forming, more of a macro upper level wedge than we saw a few weeks ago in mid-May. We can draw our trend lines right here. You can see that upper level trend line that continues to control the market, and obviously you have a couple higher lows constraining the bottom of the pattern. But yesterday it looked like we were going to potentially break above it, and as we said, that article came out, pushed us back below. We ended with a doji candlestick, which is an indecisive candlestick, and we also are in a wedge pattern, which is an indecisive pattern. So indecision is the name of the game right now, and I think it's time to sit on your hands a little bit, be patient until that rate decision perhaps leads us to a leg in one direction or the other.
But if we are looking for setups out there right now, tech actually has among the best setups out of the sectors right now as interest rates are rising. Why the interest in tech right now?
In Off the Charts last night, we talked about all the different long setups that are in tech. That doesn't mean we're necessarily putting all of our chips on the long side, but as Brittany said, a lot of the best setups are in the tech sector, and that's largely due to the fact that interest rates are rising, expectations are for higher interest rates, and due to that, you've seen money pile out of consumer staple, dividend-oriented stocks and more into riskier equity assets. And I think as a result of that, you've seen tech actually show some relative strength, at least individual names, the stronger names in the sector. The Qs have been weighed down by Apple, but you've seen several stocks in the tech sector show some strength and are setting up nicely now.
Right, especially when we get news like Netflix's deal with DreamWorks. That would really help the stock.
Yeah, I mean, Netflix, obviously that was a big news-driven play. We go to the chart of Netflix. They announced their biggest ever content deal. It's with DreamWorks for exclusive content, which is going to be the trend you're going to see with Netflix and those streaming service providers. They gapped up big on that news. We've been stalking this downtrend for a potential entry in this highly shorted stock after it held the 50-day moving average, but that gap took away the trade a little bit. But that doesn't mean you can't capitalize on a next move higher for Netflix. And if we see a nice base form after it held its gap nicely yesterday, I think you could see more upside in Netflix.
And even Cisco and Hewlett-Packard, both of which gapped up on earnings and are holding higher as well.
Yeah, we love stocks that gap up on earnings, hold that gap, and form another base for another move. So you have Cisco here, if we go to the chart. Nice gap, and wanted to break out yesterday, but was weighed down by that broad market weakness early afternoon. I think it'll go once the market finds its footing, especially if the Fed, if people respond positively to the Fed. You also look at Hewlett-Packard, another tech bellwether, similar type of situation, not quite as strong as Cisco, but nice upper level base to measure your risk and potentially play for a breakout.
And of course, even Google, a standout in the group that Scott and I talk about all the time. And what's your strategy when it comes to Google?
Google, I think, is one that you buy on any dip and you hold it for as long as you want. I think Google, they're the innovators in today's tech world. I think the stuff they're coming out with their Google Glass and the self-driving cars and Project Loon, if you haven't read about it, it's the new wireless internet initiative where they're sending out basically hot air balloons around the world and making a big wireless network, and it could revolutionize and bring internet to Africa, to places that don't have it already. New Zealand was a test project for it, but those are just examples of projects that could make Google a very compelling growth play in addition to the rock-solid foundation they have with their search business. We'll go to the chart really quickly. You can see Google bounced back nicely off the 8 and 21-day moving average after spending a few days below it, but I think this will be back to highs before you know it.
And we should check in the home builders really quickly, too, after yesterday's report that the June's housing market index jumped to 52. That's the first time in 7 years it's jumped over 50. And, of course, XHB jumped about 1.5% on the news.
Yeah, the home builders have been a big drag on this market, and many thought that there was a long-term top put in on the home builders, and that could be the case, but we've seen a nice bounce back on that data. We'll take a quick look at the chart of the XHB. Really strong 3-day move, a nice follow-through yesterday after this big igniting bar. It's back above all moving averages now, so we could see XHB back at the highs, and that would be a big boost for the market.
All right, we've got lots more to talk about, so join us for the long version.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.